Buying a BTO is a wonderful and exciting milestone for many households in Singapore, but navigating the financial aspect can feel a little bit overwhelming. So, in this video, I'm going to discuss how much money do you need to prepare depending on the price of the flat that you want to buy. And I'm also going to discuss the extra fees that people often overlook when buying a BTO. Now, let's talk about the BTO down payment. How much do you actually need? The down payment rules are now neatly aligned across both loan types to ensure long-term financial stability for home buyers. If you take an HDB housing loan, the loan to value or LTV limit stands at 75% of the flat price. This means that the remaining 25% must be paid as a down payment. The good news is for an HDB loan, this entire 25% can be paid by using your CPF ordinary account savings, cash, or a combination of both. In the past, this used to be 80%. It was lowered to 75% as part of the cooling measures introduced in August of 2024. This change was specifically implemented to encourage prudent borrowing and align HDB loan limits with those of commercial bank loans. Now, speaking about bank loan, the standard LTV limit for commercial bank loans is also 75%. This means your down payment is 25% of the flat price. But the key difference between bank loan and HDB housing loan is banking regulations require that at least 5% of the flat price must be paid in hard cash, while the remaining 20% can come from your CPFOA or cash. But then if you remember for HDB housing loan, the 25% can be fully from CPFOA. So that is the key difference. To make it clearer, let's talk about real life numbers. So for example, if you want to buy a flat that is like $200,000 after grant, maybe it's a two-room flexi or something, the total down payment needed is 25%, which is $50,000. So if you borrow from HDB, the entire $50,000 can be fully paid using your CPFOA savings or cash if you prefer. But if you take a bank loan, a minimum of $10,000 or 5% must be paid in cash. The remaining $40,000 or 20% can be paid via CPFOA or cash. So I'm putting here on the table so you can screenshot because it depends on how much is the flat that you want to buy. So for example, if you want to buy a $500,000 flat, then the down payment needed is $125,000. If you borrow from HDB, again, you can fully use your CPFOA if you have enough there. But otherwise, if you borrow from the bank, then a minimum of 5% or $25,000 must be in hard cash. And then the rest can be CPFOA. I hope this is clear. Now, if that's already clear, next we need to talk about staggered down payment scheme. So, if you are a young couple such as full-time students, national servicemen, or recent graduates booking your first home, you might not have enough funds in your CPF just yet. So, HDB allows you to split your down payment into two separate payments. Part of it when you sign the agreement for lease and the rest of it when you collect the keys later on. This helps ensure that starting a home remains within reach while your earning power grows over time. Now let's talk about other fees that sometimes people forget or don't realize because when you're planning a home budget, looking only at the down payment is like looking at an iceberg. There is a whole set of other fees hiding just below the surface. So let's walk through these other costs so you won't face any surprises. The first one is buyer's stamp duty or BSD. This is a tax levied on all property purchased in Singapore. It is calculated based on the purchase price of the flat using a tiered scale. For most BTO buyers, it's a significant sum, but the good news is it can usually be paid out from your CPFOA if you have enough balance. So the formula looks like this. So in summary, for $200,000 flat, the BSD is about $2,200. And then if you go to the biggest example, for a $500,000 flat, the buyer's stamp duty is $9,600. And then for the $500,000 flat example, the buyer's stamp duty would be $9,600. And then the next fee that you need to consider is legal fees and also conveyancing fees. Okay, that's a mouthful. HDB handles the legal paperwork for your purchase. If you use an HDB loan, the legal fees are structured incrementally and usually add up to the few $100s. But if you take a bank loan, you will need to engage a bank-approved law firm to handle the private conveyancing work, which typically costs a fixed rate between $1,800 to $2,500 in cash, but sometimes bank do some promo as well. But the watch out is if you redeem your loan, sometimes bank will claw back the legal fees, so that's a watch out. And then the next fee that you need to consider is home protection scheme and fire insurance. If you're using CPF savings to pay your monthly mortgage installments on an HDB flat, you are legally required to be insured under the home protection scheme or HPS. This is a mortgage reducing insurance policy that protects your loved ones from losing the home if an unexpected event prevents you from paying the loan. The premium depends on your age, health status, and loan amount, and it is deducted annually from your CPF OA. Additionally, basic HDB fire insurance is mandatory, but it is very affordable. It's like $10 or something for a period of 5 years, so it's very affordable. And then the next fees is survey fees and caveat registration fees. These are minor but mandatory administrative expenses. So a caveat registration fee is about just under $65 is paid to legally protect your interest in the flat during the transaction. Survey fees vary slightly but generally between $150 to $400. And then the next one is the option fee, which is paid at flat booking. So when your queue number is called and you go to the HDB Hub office to select your unit, you must pay an option fee on the spot. The fee will depend on the flat type. So for example, 2-room flexi, the fee is $500. For 3-room is $1,000. And then for bigger flats such as 4-room, 5-room, and also 3-gen, the fee is $2,000. And this fee must be paid via nets or credit card. So you cannot pay it using CPF. But don't worry, this is not an extra charge because it is actually part of your total purchase price and will be subtracted from the down payment later on. And of course, there are other fees that you need to consider, such as renovation costs and also the cost to furnish the apartment itself. But of course, that one comes at later stage when you are ready to collect your keys. By understanding these figures early, you can systematically budget with your partner or family and make the most of available housing grants, select a location and budget that ensure peace of mind. If you have any questions, let me know in the comment section down below. Thank you so much for watching and I'll see you in my next video. Bye-bye. To support my work, you can give a one-time tip by pressing the thanks button, pick the amount that you want, and click buy and send. Or you can also press the join button for exclusive contents and monthly membership. Your support means a lot to keep us independent. Thanks for watching and I'll see you in my next video. Bye bye.